Welcome to Akara Financial, where we cover personal finance, business, and self-development, all with the goal of helping you enhance your wealth and achieve financial success. In today's video, we're diving into a topic that affects us all: managing our expenses and cutting costs effectively. With the rising cost of living and the ever-increasing prices of everyday items, it's more important than ever to take control of our spending habits. Whether you're looking to save for a big purchase, build an emergency fund, or simply want to improve your financial health, this video will provide you with actionable strategies to help you achieve your goals. We'll cover items like tracking your expenses and making smart decisions about loans and savings. So grab a pen and paper and let's get started on your journey to financial freedom. Before you can determine where to cut costs, you need a clear picture of your current spending habits. This might be shocking at first. While you can jot down expenses manually, most people today prefer using spreadsheets or apps on their phones or computers. However, firstly, it's important to categorize expenses accurately. Gradually, you can identify which expenses are essential and non-negotiable, such as rent, utilities, food, and transportation. The challenge lies in assessing other expenditures. While some indulgences are necessary, excessive purchases might not bring joy. By closely examining your spending, you can spot areas where money is wasted. For example, consider whether an $18 lunch is worth its cost, or if you are paying for unused TV subscriptions. Apply the Marie Kondo method to evaluate each expense. Meaning, is it necessary or merely convenient? Does it add value to your life? Does it bring lasting joy? Everyone has different priorities, so assess whether each expense is justified. A helpful strategy is to color code your expenses: green for essentials, orange for items you're unsure about, and red for unnecessary costs. Secondly, deciding what to cut and keep. Once you understand your spending patterns, focus on eliminating the red expenses and possibly some orange ones. Gradually find ways to reduce unnecessary spending that drains your finances unnoticed. At the same time, it's crucial not to feel deprived, as budgeting is similar to dieting. Denying yourself all pleasures can lead to binge spending. Instead, allow yourself enough enjoyment to satisfy your desires. Allocate a budget for occasional indulgences, like a bar of premium chocolate or a small getaway, to better control your spending. I've found it easier to manage finances by maintaining two separate bank accounts. I have two bank accounts: the first account where my salary is deposited and from which my primary expenses are automatically deducted, and another for my daily spending. These expenses typically remain consistent each month and are often paid via direct debit. So make a list of them. Include items like car insurance, rent, utility bills, loan repayments, and credit card bills. Once you've calculated your fixed expenses, you'll have an amount that should remain untouched in your account to cover those bills. I leave this set amount in my first account each month and ensure I can't easily access it when tempted. I then transfer the remaining balance to my second account for daily use. This includes items like groceries, fuel, and other variable essentials that are not fixed. Depending on your spending habits, this amount might also cover less frequent expenses like haircuts. You can also use this account to treat yourself once in a while by doing things like buying clothes, purchasing items on sale on Amazon, taking a small getaway, or enjoying a night out with friends. This is essential to avoid binge spending. Avoid using credit cards for unnecessary purchases. If you don't have the cash, you can't afford it. Credit cards should be reserved for emergencies only. Next, let's look at loans. The only valid reason to take out a loan is for a necessary, high-cost purchase, such as a car or a new roof. Even then, the loan must be genuinely affordable. Consider the repayment period and the stability of your income during that time. Ensure you have some financial flexibility for unexpected costs or interest rate increases. Borrow the minimum. Ensure your purchases are reliable, as skimping on costs can lead to greater expenses later. Be cautious of so-called interest-free cars. Despite claims, you end up paying interest through inflated car prices. Always compare the car's value with the price they charge, as there's no such thing as a free lunch, especially with cars. Savings are crucial, and I will go in depth on how to save effectively in a future video. Funds from a savings account should only be used in dire emergencies and only after using credit cards. A money-saving trick I learned from a friend is preparing a week's worth of lunch every Sunday for the following week. This simple habit has helped me save significantly over the years, as fast food costs can quickly add up to a substantial expense by month's end. Fast food prices have skyrocketed in recent years, with some items increasing by over 100%. Let's look at how prices have changed for popular fast food brands. At McDonald's, a Big Mac meal jumped from $5.99 in 2019 to $12.68 in 2024, while medium fries more than doubled from $1.79 to $4.79. Wendy's Dave's Single Combo Meal increased from $6.19 to $8.99, and Burger King's Whopper Meal rose from $7.19 to $9.58. Taco Bell's Crunchwrap Supreme went from $3.69 to $5.29, while Subway's Footlong Turkey Breast Sub climbed from $6.99 to $9.49. Chipotle's Chicken Burrito Bowl increased from $7.50 to $10.30, and KFC's 8-piece bucket meal rose from $21.98 to $27.98. Popeye's 3-piece chicken tender combo jumped from $6.99 to $9.99. Domino's large 3-topping pizza went from $7.99 to $10.99, and Five Guys cheeseburger increased from $7.69 to $10.39. And the list goes on. And there you have it, folks. We've covered a lot of ground today, and we will cover more in future videos. From understanding your spending habits to making informed decisions about loans and savings. Remember, the key to financial success is not just about cutting costs, but about making mindful choices that align with your values and long-term goals. Begin by tracking your expenses, categorizing them, and identifying areas where you can cut back without feeling deprived. Remember, it's not about perfection, but progress. Every step you take towards better financial management is a step towards a more secure and fulfilling future. Thank you for watching Akara Financial. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more insightful content delivered straight to your feed. See you next time.